and welcome to the Islamic Finance Weekly, where we discuss relevant topics in the non-interest finance markets. Sharia audit is one of the most important functions for any Islamic financial institution in making sure that the business transactions do not harm the society through the Islamic concept of Maqasid al-Sharia. Despite the fact that Islamic finance institutions have gained international recognition as a viable and vibrant component of the global financial system, Sharia audit remains a key step to the stability of the gateway to Islamic Financial Institute. In this episode of the Islamic Finance Weekly, we'll be discussing strengthening the Nigerian Islamic finance industry through auditing. We'll also look at audit process, issues and challenges, and the way forward. So I have an expert on the show, Sobur Bello, Auditor for Financial Services Institutions, United Kingdom. Mr. Sobur Bello joins me from London. Good morning and thank you for coming on the program to discuss this relevant topic.
Good morning and thank you so much for having me today.
You're welcome. The development of the Islamic finance system and the increasing demand for new investment tools have made Islamic finance an important field of activity in the global financial sector. Share with us the main scope of Sharia compliance, or the Sharia compliance audit and audit process.
Okay, so thank you so much again for having me. Before we start, so let me just make this disclaimer. So I am talking in the capacity of Sobur Bello and not for my employer, right? So having said that, audit is audit, right? Whether we're doing a Sharia compliance audit or we're auditing conventional institutions, that's conventional finance institutions. So, however, the only change dynamics of Islamic finance now is that we're tilting towards more of checking for Sharia compliance. What is obtainable in conventional finance might not relatively be applicable in a Sharia compliance environment. So, and you would agree with me that nowadays audit has even transcended the level of looking at the numbers alone, up to the point of assessing what has given rise to the numbers. Stuff like looking at the business operations that have given rise to the numbers, IT systems that have given rise to the numbers, risk management processes that have also given rise to the numbers. So that is what audits of Sharia compliance would then look like. So we're not looking at just auditing mudaraba transactions that IFIs. So when I say IFIs, Islamic Financial Institutions, have reported in the financial statement alone. We're also looking at what was the origination of that mudaraba transaction, for example. What are the different controls? What are the risks that we've identified? And then by risk, I mean, risk literally means that what exactly can go wrong along the line. So those are the things that audit looks like when we're auditing Sharia compliance. Of course, we have different users of the financial statement we're auditing. So we have regulators, we have users of financial statements. When I say users of financial statements, users of the information the IFI is publishing. We have regulators who are also very much interested. We have researchers who are interested in the information Islamic financial institutions have published. So from an audit standpoint, what we then do is to make sure that that financial statement is a general purpose financial statement. So by general purpose financial statement, what do I mean? I mean a financial statement that serves the purposes of all these users of financial statement at in time. I mean, so there is a way accountants are very beautiful persons. There is a way accountants can maybe prepare financial statement that suits the government alone, for example, right? There's a way you can prepare accounts that suits particular user, that suits users, what shareholders want to see. But from an audit standpoint, what we want to see is that we want to be sure that audited account that we would be rendering opinion on, that will be expressing opinion on, is a general purpose financial statement. And then the typical audit process is to start from what has given rise to the numbers that we have on the financial statement we want to audit. We want to walk through the business operations. We want to be sure that you said, yeah, these products are Sharia compliant. Are they truly Sharia compliant? We want to be sure that there have not been any breaches of Sharia principles. We want to be sure that there are no breaches of regulatory principles, both local, those of AA, AOFI, and IFSB as applicable. Yeah, so those are the basic principles of Sharia compliance, not materially different from what we would have in a conventional space. Only that here we're also looking at the principles of Sharia, and we're ensuring that there's compliance across board.
Absolutely, Mr. Sobur. Adequate Sharia audit practices are necessary to ensure that the operations and the activities of the Islamic financial institutions are in line with the Sharia principles and rules and guidelines set by the regulatory authority. Thank you very much for sharing your perspective with us. From what you've explained, part of the role of Sharia scholars is to conduct the regular Sharia compliance audit for the bank. So, what are the emerging issues for auditing in Islamic financial institutions?
Okay, so really, I think the biggest one is competence. Because you agree with me that this is a new field, a new area in within the finance space. The Islamic finance is still relatively growing. So the biggest concern now is that even from an audit perspective, you find out that we're still learning. From the client perspective, that's the Islamic financial institution perspective too. A lot of learnings too are still very much required. And most importantly, you cannot even say with precision that, okay, this particular product passes the definition of permissibility. It's a function of fatwas by the Sharia board, advisory board, and all of that. So when businesses bring forth transactions, we evaluate. It's not cast in stone. It is unlike a conventional environment where you just look at it, attest, look at the principle, and move on. Here, you still need to critique, look at it. So much more of a principle approach actually. So competence is one of the biggest issue. So we still need people to up their games in terms of the knowledge of Sharia compliance, Islamic finance, non-interest finance, and all of that. So other issues that we still have is, another very big one that I think I implied in competence is permissibility of Islamic products, right? You see that businesses are expanding. For example, we have introduction of the e-naira in Nigeria. So a lot of other developed economies are having digital currencies. So we have cryptocurrency also spanning up. So the concern is, what is the place of all of these in our Islamic finance? So there have been different fatwas around whether cryptocurrency is tenable or not tenable, for example. So where you have some of these developments that are going on largely, and Islamic financial institutions are now also opting to some of these products or getting into some of these products. The analysis of whether these products are permissible or not permissible are issues that are also emerging nowadays within the financial institution space. Also, we have system configuration of finance operations, particularly for Islamic financial institutions that are using the Islamic finance window. Again, we have those that are full-fledged Islamic financial institutions, and we have those that are using the window opportunity. So those that are using the window opportunity, you see that their systems most times are designed to take care of conventional transactions. So, the system architecture, design of the system architecture that accommodates proper Islamic finance transactions aligns with accounting for proper Sharia compliant product is also an emerging concern. So we have so much issues springing up within the accounting and audit space that talk around ESG, that's the environmental, social, and governance reporting issues. We have other integrated reporting issues. Those are also issues that affect Islamic financial institutions. So where there are local regulations, in Nigeria, CBN still regulates the total finance space in entirety, including Islamic financial institutions. So where there are certain certain local regulations, they are also bound by some of those, and there are issues that are emerging on a day-to-day basis that they need to assess. The macroeconomics too also largely affect Islamic financial institutions. You'll see in a lot of financials where entities have started reporting the impact assessment of the Russia-Ukraine the Russia-Ukraine fiasco, you start seeing the impact assessment disclosed in the financial statement. So, I mean, the Islamic financial institutions are also not left out in all of this. They are bound by also reporting what is the impact. They want users of financial statements are interested. They want to see what exactly is the impact of some of these macroeconomic variables in on the financial statement you have reported. Cyber security remains another biggest margin issue for any entity, right? I mean, it's been with us over time, and it keeps on lingering as we speak. Cybersecurity is also a concern that IFIs and including the Sharia advisory board should also be considering when they dish out some of their review comments typically. So I think some of these and awareness and sensitization still needs to still be done, and all of that. So those are issues that I've identified as emerging issues within the Islamic finance space. Yeah.
To solve these emerging issues, we need Islamic financial institutions need properly guided Sharia standard for Sharia auditing practices.
Yeah, absolutely, I agree with you. So, and I feel like, I mean, AAOIFI and the IFS also been coming up with some of these,
And
some
the
of these,
IFSB.
yeah, IFSB, yeah, I've also be coming up with some of these principles, standards, guidelines, so that there's structure to the approach of taking care of some of these concerns. Yeah.
Thank you very much, Mr. Sobur. Talking about Sharia auditing in Islamic financial institutions, and you know that the biggest component in the Islamic finance principle we have the banking sector, which comprises of over 80% of the total asset in Islamic finance. But the biggest risk for Islamic bank is Sharia non-compliance risk. So, how can risk management be entrenched in Islamic banking?
Okay, so I mean, the good side of things is that risk management, even in an Islamic finance space, is not entirely different from what we have in the conventional space. Risk is risk. Risk is what can go wrong. So what can go wrong? The next thing is what do I do to mitigate that eventuality from happening? So whether we're coming from a conventional angle or coming from an Islamic finance angle, I mean, we're still on point. The only peculiarity, I mean, is only that some of the Islamic finance products do not have an entirely similar risk as that of conventional products, right? I'll give you an example. So take, for example, hedging. Hedging in conventional risk. So in conventional, within the conventional space, if I have a product that is volatile, that has high market volatility, so what I can do is to hedge, enter into swaps, forward contract, and all of that. So within the Islamic finance space, some of those hedging might not be tenable. Scholars have written that, I mean, doing some form of that, it has some level of speculation, some level of, there's this Arabic word, garar, that is around it, uncertainty. Yeah, so that is around some of those. So we have been told that, please don't do hedging typically. So in lieu of hedging, scholars have also come up with some other kind of contracts. So there is one that they call parallel contract. I'm not sure I got the name correctly. So what that does is that rather than hedge, you can also do like a commodity transaction to hedge against. It's a form of hedging too, only that is not like that of a conventional space. So in doing your risk management, one has to be wary of some of those peculiarities of the NIB space to be sure that you are doing a round hole in a round peg, or you are doing a round peg in a round hole, as it were. So risk management typically is just 3 lines of defense, right? The 3 lines of defense in risk management means that I should have defense level 1. Defense level 1 is for those charged with governance and management. So management should own up their risk at that level. So owning up their risk means that they would have charter, they would have risk management documentation and policies, so which entities have to abide by. So the tone of risk management has to come from the top, right? So it is at that level that we would have Islamic, so there is internal control document that we used to have, right? So we can have the one that specifically suits Sharia compliance. I think there is one popularly in practice that we call internal control Sharia policy or document, something like that. So, I mean, what that does is that you are looking at an internal control environment from an entirely different perspective from a conventional space. You are much more focused on what is obtainable within the Sharia space. You are looking at an Ijara product that you have given out to a customer, and you're asking yourself, what exactly can we do from an Islamic finance perspective? What controls can I put in place to get recoveries from the customer, to get the series of lease payments that the customer is supposed to pay? So different from how I would have done it if it were a conventional environment. Remember, Islamic finance emphasizes equity, emphasizes justice, emphasizes fairness, emphasizes compassion. I mean, some of which may not be inherent within the conventional space. So, I mean, internal control documents that take care of all of these are designed by management. So that's level one. Level two of or second line of defense is that management would put in place oversight function, people that would check that the controls that management have put in place are working as it were. So that is where we need to have like Islamic finance control officer or Sharia compliance officer, some who are saddled with the responsibility of looking at what management have said would be doing, so that the eventuality that can go wrong is not happening or will not happen in the future. So I mean, that's the second line of defense. While the final line of defense is a form of assurance, that's where the external auditors and the internal auditors reside. So external auditors would be checking, they want to render opinion, they want to render opinion on the financial statement that they've seen, on the controls of the Islamic financial institutions that they've checked. They want to be sure that, yeah, they are effective and they are working as said in the policy documentation. So that's where the internal auditors and the external auditors, that's where they come in. They do their regular checks, spot checks to be sure that controls that have been put in place by management is working and effect as required, and also meets up with international standards. So I feel once your three lines of defense is working effectively across each of the value chain, then I mean your risk management is properly entrenched, and it's working effectively.
Thank you for sharing your insight with us on risk management in the non-interest bank. Well, you know that non-interest bank also need more instruments to boost liquidity.
Yeah, absolutely. I mean, to boost liquidity, there are a lot of tools that is still required. There are a lot of, I feel like largely we're still behind. Islamic finance is still behind because of sensitization is still very low. I'm sure that even the Central Bank of Nigeria, the Association of Financial Institutions of Nigeria, the FRC in itself, Financial Reporting Council of Nigeria, still have a very long role to play, a very long way to go in all of this. They have very big roles to play in getting all of this sorted. Yeah.
Thank you, Mr. Sobur. So what is your thought on the framework and governance of non-interest finance in Nigeria compared to other jurisdictions? What are the necessary steps for improvement?
Okay, so I do not think we're materially far apart in Nigeria, right? I mean, a lot of Islamic financial institutions have that Sharia advisory board that is advised. So we have risk management committees, we have internal audit committees, and we've started seeing that even on Islam, for guys that are Islamic financial institutions that are doing windows, that are in the window opportunity, also now have like Sharia experts sitting down on their internal audit committee, board audit committee. So, I mean, that is telling us that we're moving in the right direction. Not to say that we don't have a lot of improvement to still do. I still feel like the Sharia advisory board particularly still needs to improve on review processes, attestation that they do on their financial statements, so that we're sure that all the attestation that they have done are verifiable and what is actually in place, right? We also, just as I said the other time, I feel like in other bigger climes, we're seeing Financial Reporting Council also collaborating with AAOIFI and IFSB, right? So, I mean, when they issue standards, just like we have in conventional space, we have accounting standards, IFRS practically. So, an IFRS have been adopted by FRCN in Nigeria, right? So, we're looking forward to something like that too. Let's have like an adoption of some of these AAOIFI standards so by FRCN. So, let's have FRCN rules on some of these standards of IFSB and AAOIFI that are even, much more bespoke to our environment. So maybe adaptation is the word. Adapt some of these standards and check with our own environment to be sure that, yes, some of these standards suit us. So, I want FRC, I want to see FRC rules, I want to see FRC standards, FRC's pronouncement on how entities should report Ijara transaction, how they should, what are the requirements for registering Sharia Advisory Board in Nigeria, for example, because most times Sharia Advisory Board members of Sharia Advisory Board do not even reside in Nigeria. So we want to have much more collaboration from the CBN, FRC, working together with some of these already established Islamic finance regulators.
All right. It is important for financial institutions venturing into Islamic finance services to incorporate Sharia objectives in their product, but there is shortage of manpower deficit in Islamic financial industry. So what is the role of AAOIFI in this regard? Are they considering partnership with NIFIAN for capacity building and for more Sharia compliant auditors in Nigeria?
Okay, so I actually do not see AAOIFI reaching out to NIFIAN, right? What I rather see is that NIFIAN needs to maybe restructure so well and make that collaborative move with AAOIFI. So not to say that, if tomorrow it happens, but because one of the set objectives that AAOIFI has set out to do is that they want to, as much as possible, increase awareness and sensitize people, organize trainings and all of that. So rather from AAOIFI's standpoint, I think what they need to do more is, I've seen them collaborate with CIMA, for example, these international exams. So I feel like maybe they need to do so much more of that. Collaborate with very renowned exam institution, or accounting institution, as it were, like ICANN in Nigeria, for example, CIBN, collaborate with our own NIFIAN as well, so that what you are preaching, is easily permeating around the shores of Africa and the world at large. So I do not really see what I would expect to see is NIFIAN, since they have that structure already in Nigeria, is to make some of this collaborative move, gain international relevance, push for so what general certification can people take that makes them relevant within this space? I am sure that, in fact, we start having non-Muslims even take up some of these things. So because largely some people are still having that religious sentiment around Islamic financial institution, I feel like it is the role of NIFIAN to collaborate with AAOIFI on how they've been able to do it in other non-Islamic states. For example, in the UK, a lot of some of these structured banks have Islamic finance windows, that has given leeway. And if that can be done in developed areas of this type in Luxembourg, in other developed economies, so nothing would stop it from being also entrenched in Nigeria. So I feel that level of collaboration, replicating what I've said again in the previous question, to have FRC get involved or relevant stakeholders get involved too, would help us have a very good structure in terms of governance, in terms of who issues what. Like we said, FRC in Nigeria regulates IFRS, Financial Reporting Standard. So we want to see them also checking applicable reporting standards that affect Islamic financial institutions. We want to see them also reviewing audit standards that also affect some of these IFIs. So and in fact, even our lawmakers too should also find a way to also institute some of these within CAMA 2020 and make amendments, make sure that there is also leeway for some of these Islamic financial provisions and all of that. So those are my insights.
And to close the manpower deficit, Sharia scholars must be trained to develop the right techniques, and also the conventional auditors must also understand the business of Islamic financial institutions, in terms of its product offerings and operations.
Yeah, absolutely. I agree with you. I mean, from that was why I started the interview by saying that knowledge is really on both sides, both from the auditor and the auditee, right? So we need to keep developing, keep getting to understand, and most particularly just to fight for my co-auditors, both internal and external auditors. I feel like entities need to come up with very strong Sharia compliance documentation of processes. If you say you have a Mudaba process, let's have an end-to-end documentation so that when some of these reviewers come in, it makes it very seamless to be able to do a walk through the process. Yeah. So thank
Indeed,
you.
it was nice having this conversation with you, Mr. Sobur. Bello, thank you very much for coming on Islamic Finance Weekly. We really appreciate your intervention and have a nice day. And we hope to feature you subsequently on the Islamic Finance Weekly. Thank you very much.
Okay, so thank you so much for having me. Thank you.
Bye.
Yeah, bye. Yeah, bye.
Have a nice day. No industry has achieved sustainability without an effective auditing process. As Islamic finance continues to evolve as a key alternative source of investment globally, regulators like the AAOIFI will need to work closely with the non-interest financial institutions in capacity building and improve mechanisms to strengthen the industry and make it more attractive to ethical investors. And that will be all for this edition of the Islamic Finance Weekly. You can follow our social media platforms displayed on the screen and join our website, crochet.co, to watch our videos and read our news stories. Till we come your way again, thank you for watching and bye for now.